What if the biggest financial transformation of our lifetime has already started, but most people are still too distracted to notice it? Seriously, think about that for a second. Every single day people wake up, go to work, scroll social media, complain about inflation, stress about bills, watch political arguments online, and continue living normal life. While behind the scenes, some of the most powerful financial institutions on earth are quietly discussing the future architecture of the global monetary system itself. Not just crypto, not just banking, not just digital payments. The actual future structure of how money moves around the world. And honestly, once you really start paying attention to what's happening globally right now, it becomes very difficult to ignore how fast everything is changing. Because this isn't just random internet hype anymore. Banks are changing. Governments are changing. Payment systems are changing. Financial infrastructure is changing. Technology is changing. And maybe most importantly of all, the conversation around money itself is changing. That's why XRP continues exploding back into global conversations again and again. Because whether people love XRP or hate XRP, one thing is undeniable. Ripple positions itself directly in the middle of conversations surrounding cross-border payments, liquidity movement, financial modernization, and blockchain infrastructure years before most people even understood where this industry might eventually go. Now, before we go deeper into this, let's clear something up immediately because the internet loves twisting narratives into extreme clickbait. This video is not saying the IMF officially adopted XRP. This video is not saying XRP replaces the US dollar tomorrow. This video is not predicting the collapse of civilization next week. But what this video is saying is something much bigger and honestly much more important. Global finance appears to be entering one of the biggest transition periods in modern history, and organizations around the world, including governments, banks, international institutions, payment providers, and asset managers, are actively preparing for a future that looks increasingly digital. That part is no longer speculation. That's reality. And if you still think blockchain technology is just internet magic money, you may not realize how quickly institutional involvement has accelerated behind the scenes. Because while retail investors argue on social media over daily price charts, institutions are discussing infrastructure. And infrastructure is where real power exists. Now let's talk about something most people don't fully understand yet. The current financial system was not built for the modern digital world we live in today. Most people assume because they can tap an app on their phone and send money quickly that the global banking system itself is modern. It's not. Behind the scenes, many international payment systems still operate on infrastructure built decades ago. Cross-border transfers often require multiple intermediary banks. Settlement delays can take several business days. Liquidity becomes trapped across different jurisdictions. Operational costs remain enormous. And institutions lose billions every year because moving money globally is still surprisingly inefficient. That's insane when you really think about it. We live in a world where artificial intelligence can generate human-like videos in seconds, where smartphones are more powerful than old supercomputers, where people communicate instantly across continents. But global finance? Still slow, still fragmented, still expensive. Ripple recognized this problem years ago, and instead of building around internet hype culture, Ripple focused directly on liquidity infrastructure. That's one of the main reasons XRP supporters remain so passionate even during difficult market periods. Because from their perspective, Ripple wasn't trying to become another meme project. Ripple was trying to solve institutional inefficiencies inside global finance itself. Now here's where things start becoming even more serious. The world economy right now is under massive pressure. Massive. Global debt continues exploding higher. Governments keep borrowing aggressively. Interest payments are rising rapidly. Inflation continues hurting consumers globally. Housing affordability keeps declining. Banking instability appears in waves. Commercial real estate problems remain dangerous. And confidence inside traditional financial systems has weakened significantly compared to previous decades. People can feel this pressure everywhere. You feel it when groceries cost more every month. You feel it when rent keeps increasing. You feel it when young people start believing home ownership may never happen for them. You feel it when banks suddenly appear on the news because of liquidity concerns. You feel it when governments continue printing money, while national debt climbs higher and higher. And historically, periods like this often accelerate transformation. Why? Because pressure forces systems to evolve faster. When economies operate smoothly, institutions resist major upgrades because changing infrastructure is risky and expensive. But when systems become stressed, modernization suddenly becomes urgent. That's exactly why conversations around blockchain infrastructure, digital finance, stablecoins, and tokenization are growing so aggressively right now. Not because governments suddenly became crypto maximalists. Not because banks magically love decentralization overnight, but because institutions are constantly searching for efficiency. And technologies capable of improving efficiency become much harder to ignore during periods of financial pressure. Now, this is where the IMF conversation becomes extremely important. Organizations like the IMF have repeatedly discussed modernization of global payment systems, cross-border settlement improvements, financial inclusion, and digital infrastructure development. Again, this does not mean the IMF officially endorsed XRP directly, but it does explain why XRP supporters pay very close attention whenever global financial organizations begin discussing the future of digital finance. Because Ripple built specifically around those areas: cross-border payments, liquidity movement, settlement efficiency, financial interoperability. That's why supporters believe Ripple positioned itself ahead of where global finance may eventually move. Now, let's talk about the Great Reset, because this phrase creates emotional reactions instantly online. Some people think it's purely conspiracy theory territory. Others believe it represents a transition toward increasing digital control. Some think it simply refers to economic modernization following global instability. But regardless of opinions, politics, or internet drama, one thing is undeniable. The global financial system is changing rapidly. Digital currencies are being researched worldwide. Central banks are developing CBDCs. Governments are building crypto regulation frameworks. Asset managers are investing into tokenization. Banks are modernizing payment systems. And financial institutions everywhere are preparing for a more digital future. That's reality. Now, whether someone calls it modernization, transformation, or reset doesn't really change the underlying fact. Finance is evolving. And whenever financial infrastructure evolves, wealth often shifts dramatically. History proves this repeatedly. During the Industrial Revolution, wealth shifted toward manufacturing and transportation infrastructure. During the Internet Revolution, wealth shifted toward digital communication and online commerce. During the smartphone revolution, wealth shifted toward mobile ecosystems and app-based economies. And now many investors believe blockchain infrastructure could potentially become the next major foundational shift. Not because blockchain replaces everything overnight, but because finance itself appears to be digitizing more aggressively every year. Now, let's talk about tokenization because, honestly, this may eventually become one of the biggest financial stories of the next decade. Most average people still don't understand how massive tokenization could become, but institutions definitely understand it. Tokenization basically means converting real-world assets into digital blockchain-based assets. That could eventually include stocks, bonds, real estate, currencies, commodities, investment funds, art, government debt, and many other financial instruments. Now imagine a future where assets move globally almost instantly. Imagine settlement times dropping dramatically. Imagine lower operational costs. Imagine liquidity moving more efficiently between markets. Imagine programmable financial systems capable of automating huge parts of traditional finance. That's the future institutions are actively researching right now. And supporters believe systems capable of facilitating liquidity efficiently inside that environment could become extremely valuable. That's one reason XRP discussions continue growing. Now, another reason this topic feels so emotional online is because millions of people feel financially trapped right now. And honestly, that emotional reality matters more than most analysts admit. People are exhausted. Inflation keeps hurting purchasing power. Living costs continue rising. Debt keeps increasing. Traditional savings feel weaker. Housing feels unreachable for younger generations. And meanwhile, large institutions always seem to position themselves early before the public catches on. So naturally, when discussions emerge surrounding potential financial transformation, people pay attention. Because deep down, many people feel like the old system no longer works for them the way it once did. That frustration fuels huge emotional energy inside crypto communities generally, especially XRP communities, because supporters believe Ripple built around the future rather than the past. Now, does that guarantee XRP succeeds? No, absolutely not. And anyone pretending otherwise is being dishonest. Competition inside digital finance is becoming incredibly intense. Stablecoins are growing rapidly. Governments are developing their own digital currency systems. Banks are building private blockchain infrastructure. Technology evolves quickly. Regulation remains uncertain. And markets remain volatile. There will likely be winners and losers over the next decade. Some projects may disappear entirely. Others could become major infrastructure. Nobody knows exactly how the story ends yet. But one thing is becoming increasingly difficult to ignore. The financial world is transforming right in front of us. Digital systems are expanding rapidly. Institutional blockchain adoption is accelerating. Tokenization conversations are growing. Governments are building frameworks around digital finance. And XRP continues appearing in conversations surrounding liquidity systems, settlement infrastructure, cross-border payments, and financial modernization over and over again. That alone is why so many investors continue watching it closely, because history shows something fascinating. The biggest shifts usually seem impossible before they become obvious. At first, people laugh. Then institutions quietly begin building. Then infrastructure develops. Then adoption grows slowly. And eventually society changes around technologies most people originally ignored completely. Now, maybe XRP becomes major infrastructure one day. Maybe competitors dominate instead. Maybe finance evolves in entirely different ways nobody expects. But one thing feels undeniable now. The old financial world is changing. And whether people are ready or not, the next era of digital finance may already be beginning. Now, here's the part of this entire conversation that honestly makes a lot of people uncomfortable. Because once you truly begin understanding how fragile the current financial system may actually be underneath the surface, you start realizing why institutions everywhere are suddenly racing toward digital infrastructure at the exact same time. And no, this is not about fear-mongering. This is about patterns. Historical patterns. Because throughout history, major financial transitions almost never happen when everything is stable and perfect. They usually happen during periods of stress. Periods where old systems begin struggling while new technology emerges simultaneously. And honestly, when you step back and look at the global economy today, it becomes very hard to ignore how many warning signs are flashing at the same time. Global debt is exploding higher. Governments continue spending aggressively. Interest payments are becoming massive. Banking instability keeps resurfacing. Inflation continues pressuring consumers worldwide. Housing affordability keeps declining. And trust in traditional institutions has weakened dramatically over the last decade. People feel exhausted financially. That emotional reality matters more than many analysts understand, because confidence is one of the most important pillars holding financial systems together. And once confidence starts weakening, people begin searching for alternatives. That's exactly why conversations surrounding crypto, blockchain infrastructure, tokenization, and digital payments continue growing so aggressively worldwide. Not because everyone suddenly became a crypto expert overnight, but because people instinctively know something is changing. Now think about how strange the world feels compared to just 10 years ago. Artificial intelligence is advancing rapidly. Governments are discussing digital currencies. Major asset managers are tokenizing financial products. Banks are modernizing settlement systems. Payment providers are integrating blockchain infrastructure. And global financial organizations are openly discussing the future of digital finance. That's not random. That's transformation. And whether someone supports it or fears it, the direction of finance itself appears increasingly digital. Now, this is where XRP supporters believe Ripple positioned itself ahead of the curve years ago. Because Ripple focused directly on institutional problems most retail investors never even thought about. Cross-border settlement, liquidity efficiency, payment interoperability, financial infrastructure modernization. Those are not meme topics. Those are trillion-dollar institutional conversations. And honestly, that's one reason XRP communities remain so emotionally invested despite years of volatility and criticism. Because supporters believe Ripple was building around long-term infrastructure instead of short-term hype cycles. Now let's talk more deeply about why organizations like the IMF discussing payment modernization get so much attention online. Again, it's very important to stay factual here. The IMF did not officially announce XRP adoption, but the IMF and other international organizations have repeatedly emphasized the need for improving global payment systems, increasing efficiency, reducing settlement friction, and preparing financial infrastructure for a more digital world. That's important because Ripple built directly around those exact institutional conversations. And whenever global financial organizations begin discussing modernization aggressively, XRP supporters naturally believe Ripple could potentially benefit from that direction over time. Now, whether that actually happens remains uncertain. But one thing nobody can deny anymore is this. The old financial world is evolving rapidly, and honestly, many people still underestimate how big this transition could eventually become, because most average investors only focus on prices. Up today, down tomorrow, bull run, bear market, but institutions think in decades, infrastructure, systems, control, settlement layers, liquidity management, digital asset integration. That's where the real game happens. And historically, the largest wealth shifts often occur during periods where infrastructure changes fundamentally. Now let's talk about the Great Reset idea, because this phrase instantly creates emotional reactions online. Some people hear it and think global conspiracy. Others think economic restructuring. Others think modernization of outdated systems. But regardless of politics, opinions, or internet narratives, one thing is becoming increasingly clear. The financial system of the future probably will not look exactly like the financial system of the past. Digital systems are expanding too quickly. Governments are moving toward digital infrastructure. Institutions are integrating blockchain research. And younger generations are increasingly comfortable with digital financial ecosystems. That combination creates enormous momentum toward transformation. Now, another massive factor driving this shift is tokenization. And honestly, most people still don't realize how important tokenization could become over the next decade, because tokenization has a potential to completely reshape global finance in ways average people still barely understand. Imagine stocks moving instantly across digital systems. Imagine real estate ownership becoming programmable digitally. Imagine bonds settling faster and cheaper globally. Imagine financial assets operating through blockchain infrastructure 24/7 instead of traditional market hours. That's the future many institutions are actively researching right now. And if tokenization expands globally, systems capable of moving liquidity efficiently between digital ecosystems could become extremely important. That's one reason XRP supporters continue paying attention. Now again, this does not guarantee XRP dominates finance. Competition is enormous. Stablecoins are growing aggressively. Governments are building CBDCs. Banks are developing private blockchain systems. Technology evolves quickly, and regulations remain uncertain. But what makes XRP different in many investors' eyes is Ripple's institutional-first strategy. Ripple consistently focuses on enterprise relationships, financial infrastructure, and regulatory engagement, while many other crypto projects focus mainly on hype culture. That distinction matters, especially now, because the crypto industry itself appears to be maturing beyond pure speculation toward actual infrastructure development. And honestly, that shift may eventually become one of the biggest turning points in digital finance history. Now, let's talk emotionally for a second, because this is the part most analysts ignore completely. A lot of people watching conversations around XRP today aren't just thinking about investing. They're thinking about survival financially. They're thinking about inflation eating away their savings. They're thinking about how difficult life feels compared to previous generations. They're thinking about whether traditional systems still create opportunity for ordinary people anymore. That emotional frustration is real. Younger generations watched housing prices explode, watched debt increase, watched wages struggle to keep up with living costs, watched giant corporations accumulate enormous wealth, while ordinary people felt increasingly stuck financially. So naturally, when new technological systems emerge promising transformation, people become emotionally attached to the possibility of change. Not guaranteed riches, but possibility, opportunity, hope. And honestly, hope is one of the most powerful emotional forces in financial markets, because people desperately want to believe they still have a chance to participate in the future before it fully arrives. That's why wealth transfer narratives spread so aggressively online, because deep down, millions of people fear being left behind again. They missed early internet companies, missed major real estate booms, missed early tech stocks, missed huge AI runs. Now they look at blockchain and ask themselves, is this the next major revolution? Am I early enough this time? Or are institutions already positioning before the public realizes what's happening? That emotional tension fuels massive engagement around XRP and digital finance generally. Now, let's talk about regulation, because honestly, regulation may become one of the most important factors shaping the future of this entire industry. For years, regulatory uncertainty slowed institutional involvement in crypto markets. Large institutions hesitated because legal frameworks remained unclear. But now governments globally are actively developing crypto legislation, stablecoin rules, and digital asset regulations. That's a huge shift, because institutions generally do not deploy massive capital into legally uncertain environments. Clearer frameworks could eventually accelerate adoption dramatically. Again, nothing is guaranteed, but supporters believe regulation combined with tokenization, blockchain infrastructure, and institutional integration could potentially create one of the biggest financial transformations of the modern era. And honestly, that's why XRP supporters remain so passionate despite volatility. Because they believe they're not simply watching another speculative market. They believe they're watching the early stages of a new financial era being built in real time. Now, maybe they're right. Maybe they're wrong. Nobody knows exactly how the story ends. Maybe XRP becomes major infrastructure. Maybe competitors dominate instead. Maybe governments build entirely separate systems. But one thing feels undeniable now. The financial world is changing faster than most people realize. Digital infrastructure is expanding aggressively. Institutions are preparing for tokenized systems. Governments are developing digital frameworks. And the race to shape the future of global finance has already started. The only real question now is who will ultimately control the infrastructure powering that future.